Welcome back to the February 2016 Business Forum. I am Tammy McGaughy, Chair of the Greater Fort Walton Beach Chamber of Commerce. As I mentioned in the last segment, this segment I have a special guest as well, Miss Kelley Chamblin. She is a tax partner with the Warren Averett. Welcome today, Kelley. Thank you for
Tammy.
attending. Kelley and I work together,
We do.
and I am on the middle floor doing audit, and Kelley does tax. So anytime I have a question, Kelley, I always come to you for tax. So today we're going to be talking about some tax saving strategies for individuals and businesses. I believe that there has been some legislation that was passed in December. So could you share with the folks some of the business type strategies?
I can certainly do that. In December, we had legislation passed. It's called the PATH Act, Protecting Americans from Tax Hikes. Of course, we have to have an acronym for everything. And the important thing about this is that it's different from what we've seen every December before. If you remember, for the past several years, we wait until the end of the year to see whether certain provisions that we have enjoyed are going to be extended or not. So every year in December, they extend them for the current year at the end of the year. So we don't know this for planning purposes throughout the year. This time they extended many of them, making them permanent, and then some of them they extended for several years so that we don't have to play that game of waiting until the end of the year. And it actually has an opportunity to give a business owner a chance to make decisions early on so that we can help them with their tax planning throughout the year. On the business side, one of the provisions is called the Research and Development Credit. And I would say that we call it the R&D credit, but I would say this is the most underutilized provision that we have right now. If your business is making or spending money or resources developing new technology, techniques, processes, or innovating in any way, it's worth checking to see whether this might apply to you. It's an actual credit against your taxes as opposed to a deduction. And they also enhanced it when making it permanent. It's used to offset your taxable income, but you are allowed now, if you are a small business with $5 million of revenue or less, to choose to offset your payroll taxes. So that's a huge improvement for startup businesses because they may not have taxable income for a while.
Right.
You can carry that credit forward, so it's available, but having it now versus later is much better.
I definitely like the advantage of taking, credits now versus in the future. So
yes.
That's good. So research and development credit.
Right, and we can help you with a feasibility study to see whether that would benefit your business. Then next, we have some depreciation alternatives.
Okay.
The first one is Section 179, and it has been made permanent at the $500,000 expensing level. So this is the provision that allows you to deduct the cost of an asset in the year of purchase instead of depreciating it over its life, which might be 5, 7, or 10 years. So for example, if you pay $100,000 for a piece of equipment, you would normally depreciate over 5 years. You're getting to deduct $20,000 a year for 5 years. With Section 179, you can expense it in the year that you purchase it. Again, now versus later.
Right. And
so
Kelley, now on that Section 179, is that new and used purchases?
It is.
Okay.
So it can be new or used. The restriction there is that you have to have income to offset the deduction.
Okay.
So you can't end up with a loss.
Darn.
I know. But if you do have a loss, there's also bonus depreciation that is available. Now, it is only for new equipment.
Okay.
But it is you're allowed to take 50% of the cost of the purchase price as a deduction in the year of purchase.
Okay.
And then you depreciate the balance over its remaining life, but you don't have to have taxable income. So if you have a loss, now it is not made permanent, it's extended through 2019.
Okay.
So we have it for 4 years.
Right, and so who
that's
knows what's going to happen in 4 years. It may be extended at that particular point.
It could be.
So if someone has a question, definitely, Kelley, you have an understanding of what those items are. So I encourage, our viewers out there, if you have any question at all about depreciation or if you can take the deduction, then yeah, definitely reach out to a tax professional like Kelley here today. So that's for businesses. What about individuals? Are there any changes from an individual perspective?
There are some changes for individuals as well. In the state of Florida, as you know, we don't have a state income tax.
Yes.
So you would have the alternative to deduct either your state income tax that you paid or your sales tax. So the provision that allows you to choose between the two has been made permanent.
Oh, good.
So that's good for us in the state of Florida because otherwise we wouldn't have a deduction. So we're allowed to deduct our sales tax that we pay on purchases.
Good.
Then also there is an option if you are over 70 and a half to take a tax-free distribution from your retirement account and have it directed to a charity. Have to be 70 and a half. But I feel like this is another underutilized provision because if you are 70 and a half and you have a retirement account, then you're required to take a distribution from that account every year. And if you're going to make charitable contributions anyway, it can save you tax because charitable contributions are part of the itemized deductions that could get limited if you have a higher income level.
Okay.
So if you pay tax on the distribution and then make the contribution, you may end up with a higher tax bill. So that's definitely a benefit.
Good. Well, those sound like some really good provisions and some tax saving strategies that our individuals can use. Especially,
Definitely.
I like the part about being able to take out and donate to our charities because in our charities in this environment, need and appreciate any contributions that they can receive. What about real quickly some other services that we may provide, Warren Averett?
I would say probably the most, again, underutilized opportunities with retirement planning because there are a number of alternatives and options for a retirement plan. There are some where you can actually still make decisions for the 2015 tax year, but as a small business owner, if you plan appropriately, you can defer up to $53,000 of income to the future.
Good.
So that is a benefit that you want to look into if you own a small business.
Well, it sounds like, Kelley, there's a lot of tax changes. At least this time we can start planning ahead of time instead of waiting until the end of the year and decide if we can take that deduction or not. So thank you for sharing those updates with us.
You're
and
welcome.
Thank you for taking time out of your busy schedule to be here today. On our next segment, we will be having Maggie from Wind Creek. I would pronounce her last name, but I was going to mess it up. Maggie from Wind Creek will be here, and we will be talking about casinos and having fun. So stay tuned.